All right, hey there, guys. It's Collin Fett, your agent here with our famous lender, Gavin Crandall. Going to talk a little bit about what's going on with the mortgage world, what it means to you when you're looking to buy, where interest rates are, where they're going, and yeah, it's kind of turned over to you, Gavin. So we were just chatting before we got on. There's a lot of kind of volatility going on when it comes to interest rates, and yeah, obviously there's a ton of people looking to buy a house. I just did the market update for Ames, and I mean, low inventory and it's very competitive, but at the same time getting really good interest rates. So yeah, what's going on in the interest rate world?
I don't want to use the term volatile yet, but I mean it's definitely active.
That's a scary word. Yeah,
it's definitely active. So when we look at basically where the market's recasting, so basically we've seen more market movement in the last 8 days than we did from last November until February, right? So you're looking at almost a 3-month span of no market movement, but then in the last 8 days, it's just been going crazy with adjusting and recasting, adjusting and recasting. And the reason why is because rates are obviously tied to what the economy outlook looks, right? So when the economy was not looking too good because of COVID, they crashed the rates to spur maybe some economic growth from the housing developments and the housing market, right? Well, now the economic outlook looks very, very good because employment's back up and running and unemployment claims are lower and stimulus plan might be coming. All these different items that's really spurring economic growth. Then they're adjusting the rates because they're, okay, well, now people have a little bit of money to afford maybe a little bit higher rate, right? Because things are more stable. So they're adjusting that a little bit, which is why you're seeing that market movement. Again, like we said in our last update, let's have a little bit of context behind it, right? Is yes, they're moving, right? And yes, it's, you're going to get a lot of panic on it, but no, they're still very, very low, right?
Historically, right? Yeah.
Right. So having some context behind that of knowing, hey, we're in the high 2s, we're in the low 3s, that's still a very, very good position to be, right? Yeah. And so I just like to talk to people about, hey, yes, you're going to hear this, but also know what that means. And so if we have you have a client and we are working with a borrower, it's a really, really easy conversation because yes, they've gone up, but say you compare a 3.125 rate or a 3.25 rate to a 2.99 rate, you're talking $23 depending on, or $17 a month, depending on loan amount, right? So again, it's context. It's still important because it's real money, right? Yeah. But it's something to kind of keep in mind. Other update just want to share with you guys is with Iowa Finance Authority. So obviously we're the #1 lender in Story County with that, right? Yeah, but basically the way they kind of structure things is their grant money is available for, there's a $2,500 home ownership grant that we can grab. And really it's a really, really good loan program. So things are starting to kind of open back up, obviously with low inventory, it's kind of tough right now. Yeah. But at the same time, you have to kind of prepare for these coming months right now. So
last question, I know like during COVID lending, I don't know, I think you wanted to say you got harder or like you had to check more documentation and are we still seeing that? Is it still a lot of extra steps?
Good question. You're right. During COVID, there was additional verifications for employers, right? Because there was so much furloughing, so much unemployment and all that stuff that was really happening really fast that was really, really, really quick. So right now there's still a little bit of that, but nothing that's out of the norm. I think that they've kind of opening the credit availability up to almost to where it was pre-COVID. But in terms of for the borrower's experience and for the ease of going through it, the client's not going to really notice anything. It's more of on the logistical backside, but in terms of eligibility, it's pretty well close to where we were at prior to COVID.
Perfect. Cool. Well, yeah, it's a definitely unique space to be in with interest rates being low, not many housing. So it's like you want to buy a house, is now a good time. And that's kind of what I said in the market update that I just did was like, rates go up and if house prices go down, which I mean that could have some kind of effect on it, like even if you paid more 3 years ago, if you're staying in the house for 10 years and you lock in a great rate, I mean it might make sense, but who knows? If you had a crystal ball, I mean everything would be different. So
yeah, if I had a crystal ball, it'd be a little bit crazier than what it is already. So
well, awesome. As always, I appreciate it, Gavin. Thanks for the insight. And if you're watching this, Gavin's your guy. If you need some money to buy a house, he's got a boatload of it.
Yeah.
So he'll get you. He'll get you all. Yeah, Gavin does a great job with mortgages and answering all those questions. So as always, reach out if you got questions. Thanks so much. That's our lender update. Thanks, Gavin.